It's Wednesday, the 25th of August, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Finally, some good news on the COVID front, with the Prime Minister forecasting travel by Christmas as vaccination rates rise. That's our main story. Also coming up in today's podcast, commodity prices and equity markets jump on the back of confidence about the global economy. Shopping mall owner Scentre calls rent relief programs for retailers unfair, and a giant US investor buys into electric vehicle charging stations across Australia. Then stay listening for my chat to ANZ Chief Economist Richard Yetsenga about the Australian employment market. But first, here's a brief look at markets. Wall Street continued to rally overnight with major indices hitting new records. At the moment, investors are looking beyond the current outbreak of COVID and towards the scheduled speech by Federal Reserve Chair Jerome Powell tomorrow night Australian time. If he suggests monetary policy could tighten sooner than expected, markets could quickly reverse their gains. In early afternoon trading, the S&P 500 was up 0.2%, the Dow Jones Industrial Average and Nasdaq were both 0.3% higher. European markets were mixed, with the Stoxx Europe 600 flat, while London's FTSE was 0.2% higher. Chinese stocks have been hammered in recent weeks on the back of moves from Beijing to regulate some sectors. But yesterday, shares jumped, helped by buying from Woodark's Investment Management, which is one of the world's leading fund managers. The Hang Seng Tech Index jumped more than 7%, with Tencent and Alibaba surging, while retailer JD.com was up nearly 15%. The S&P ASX 200 closed up 0.2% yesterday to finish at 7,503 points. Energy stocks were far and away the best performers, with the energy index up nearly 3%. Among the large caps, the big miners led the way after a pretty tough week. With the price of iron ore bouncing in recent sessions, Rio Tinto closed 1.6% higher, Fortescue was up 1.3%, and BHP was 1.2% better. They should be in for another good day today, given the price of iron ore jumped a further 7% overnight. Several of the healthcare stocks were down sharply yesterday, including Sonic Health, Fisher & Paykel, Cochlear and ResMed. Coles, Woolworths and Telstra were all sold off, but the banks were mixed. Commodity prices in general have recovered in recent sessions on the back of confidence about the US and Chinese economies. Copper, which is considered an economic barometer, has lifted off its 4.5-month lows. Brent crude is up almost 8% in just 2 days, trading around $71 a barrel, and the price of gold has held above $1,800 an ounce. The Aussie dollar is trading at 72.6 US cents. The Prime Minister believes people should be able to travel interstate by Christmas, warning that state leaders needed to understand that shutting borders could do more harm than good. Scott Morrison said targets of 70% and 80% vaccination rates should be hit by then, and under the National Cabinet Plan, borders should reopen. His comments came after there was finally some good news on the COVID front, with both New South Wales and the ACT reaching milestones of 60% first dose vaccination rates. Across the country, 53.6% of eligible people have had one dose, and almost 31% are fully vaccinated. New South Wales has delivered more than 6 million jabs, a goal Premier Gladys Berejiklian nominated as the first step towards easing lockdowns. She's expected to outline increased freedoms for fully vaccinated citizens in coming days. And there is further good news. Subsidies are finding their way to business and workers in need. More than 1.6 million people along the East Coast have received $3.6 billion in government assistance during the current COVID lockdowns, with an extra 240,000 people receiving benefits during the past week. 1 in 10 people in New South Wales, or 882,000 people, have been paid $2.5 billion. In Victoria, 347,000 residents have received $653 million, while 180,000 Queenslanders have received $234 million. It came as the director of the Doherty Institute, Sharon Lewin, said reopening the economy while there are still large numbers of daily COVID-19 cases in the community will be safe once the country reaches its target of vaccinating 70 to 80% of the adult population. The Institute has provided the modelling for the National Cabinet's proposed emergence from lockdowns, but the surge in cases in recent weeks raised questions about its applicability. So, that's all the good COVID news. However, the outbreak in the ACT grew, with a record 30 new cases reported yesterday. There were 753 cases in New South Wales, with the majority in the 12 local government area hotspots. At least the number was lower than the previous 3 days. Victoria reported 50 new infections, while Queensland reported 2 new cases. The rollout of vaccinations is now full throttle, and the Prime Minister is preparing the country to open up again. Every day that goes by, more people receive a jab, and we get closer to some type of reduction in restrictions. People need to get used to hundreds of cases each day as economies reopen. Otherwise, the majority of the country will be in lockdown for months. In a moment, the rest of the news you need to know this morning. In overseas news, infectious disease expert Anthony Fauci says the COVID-19 pandemic won't end until well into 2022 at the earliest. The advisor to several US presidents said the coming months will remain difficult, with high caseloads and deaths, especially in regions with low vaccination rates. Korean tech giant Samsung has unveiled a strategy to hire 40,000 people over 3 years as it pushes into next-generation technologies. The group will spend $205 billion as it pushes further into telecommunications and robotics. And New Zealand reported 41 new cases of COVID yesterday, centred in Auckland. It's the highest single-day figure since April last year and is likely to trigger an extension of the current lockdown. Locally, Prime Minister Scott Morrison said another 650 people have been evacuated from Kabul on flights operated by Australian and New Zealand Air Forces. Given the Taliban said it refused to extend the deadline for the withdrawal of foreign troops in Afghanistan, Mr Morrison was working on the basis of getting everyone out by then. That's the end of the month. In total, Australian flights have airlifted 1,700 people to safety so far. Scentre Group, which owns the Australian Westfield shopping centres, and its chief executive Peter Allen, said commercial rent relief schemes reimposed in New South Wales and Victoria were bad policy. He said landlords were required to provide rent relief for retailers with turnovers of up to $50 million, but it should be targeted at retailers with much smaller turnover. Mr Allen was front and centre of the debate about rents last year during the worst of COVID, when Premier Investments, which owns Smiggle, Just Jeans and Portmans, refused to pay rent to Scentre. Premier eventually reported record profits. Yesterday, Mr Allen said there was a mutual interest in retailers making it through the current crisis, but the current policy was favouring retailers too much. Scentre posted a 28% jump in its profit for the 6 months to June, reflecting higher rent collections. Its share price jumped almost 7% yesterday. Merger Target Oil Search returned to profit last financial year, with the oil and gas group posting a net profit of $139 million. The group, which is working on a $21 billion deal to merge with Santos, will resume paying a dividend and said it was on track to deliver a strong full-year result. But investors are wondering why the Papua New Guinea-based organisation hasn't sought alternative bidders. Nothing like price tension to get a better offer. Oil Search's share price rose more than 3% yesterday. Online job agency Seek has returned to profit following a strong recovery in the local jobs market. Net profit jumped from a $113 million loss 12 months ago to a profit of $752 million, which isn't surprising given the surge in employment. Seek's share price, though, fell 0.7%. Smash repair group AMA has been forced to stand down 190 staff as COVID-19 and the resulting lower number of cars on the road eats into its business. Fewer cars, fewer accidents, less business for Smash repairers. The group announced a $100 million impairment as a result. Unused capacity at repairers in New South Wales is currently around 60%. The chief executive of Boral, Zlatko Todachevsky, said the building materials group expected tough times ahead, warning that once lockdowns end, it will take 6 weeks to rebuild capacity. Boral expects profits to be $50 million lower during the current September quarter because of the shutdowns along the East Coast. The group has also decided to sell its fly ash business in the US, an operation it bought for $3.5 billion just 5 years ago. The Kerry Stokes-controlled Seven Group now owns almost 70% of Boral, and the business will focus on its core Australian operations. Its share price fell more than 5% yesterday and is well below the level Seven bought in. Perhaps those shareholders that stayed the course wish they hadn't. Giant US investor BlackRock will invest around $100 million in electric vehicle charging group Jolt Charge, kickstarting a $500 million rollout of 5,000 free charging stations. Jolt's business model combines the use of existing urban electrical infrastructure, such as substations, with outdoor advertising and electric vehicle charging, according to the Financial Review. Motorists get free use of the EV chargers up to a certain limit, with revenue coming from advertising. The initial 1,000 charging stations will be installed in Sydney and Adelaide over the next 3 years, followed by sites in Brisbane, Melbourne and Perth. The share price of Kogan.com tumbled more than 15% yesterday after the online retailer said its net profit fell to just $3.5 million last financial year. The group's share price is now down more than 40% this year after soaring during the pandemic as online sales took off. But since then, the group has incurred bigger supply chain and warehousing costs. Kogan ordered extra stock earlier in the year, expecting increases in sales that didn't materialise. As a result, it ended up with too much stock and had to discount to get rid of it. The lower profit also reflected $15.6 million in equity-based compensation expenses to cover the cost of options awarded to co-founders Russell & Kogan and David Schaefer. Another stock to tumble yesterday was protective equipment maker Ansell. Its share price fell more than 9%, notwithstanding the group declared a strong full-year profit and record dividend. But soaring shipping costs, temporary factory closures in Asia, and an oversupply of single-use gloves have hit the company in recent months. Rating agency S&P Global has threatened to downgrade BHP's credit profile because it will be less diversified than its major competitors, Rio Tinto, Anglo American and Glencore, once it divests its petroleum business. Ratings matter because they determine the cost of debt, and miners borrow plenty of money to develop sites. In recent years, BHP has exited diamond, manganese, alumina and aluminium businesses and now has plans to exit petroleum. It's also looking at selling its coal assets. Nanosonics is an infection prevention company that makes a disinfection device for ultrasound probes. Its share price jumped more than 25% yesterday after it agreed revenue would rise 20% this year after posting $103 million in sales last financial year. The group had a horror first half and strong second half. The ultrasound market is growing particularly in North America, helping Nanosonics. And finally, in financial services, the difference between general and personal advice is very significant. Two Westpac subsidiaries have been embroiled in court action over whether they were providing general or personal advice when 14 customers moved their superannuation into Westpac products. The case eventually made it to the High Court, and yesterday the bank was fined $10.5 million for failing to act in customers' best interests when it instigated the campaign to get savers to put money into Westpac super products. Up next is the Daily Interview, and my guest this morning is ANZ Chief Economist Richard Yetsenga. I got Richard's take on what's ahead of us in the next few months, where unemployment will end up, what will happen to house prices, and what the economy looks like when COVID is a permanent fixture in the community. That's up next in the Fear and Greed playlist on your podcast platform, or of course at fearandgreed.com.au. It's Wednesday, the 25th of August, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.